Agencies Drinking Beer is brought to you by Proposify, software that helps you deliver beautiful proposals in the cloud and close more deals.
Welcome to the 25th episode of Agencies Drinking Beer. On today's show, we're going to be talking with Rob Barbara from Build Ventures about should agencies pursue venture capital. All right. How you feeling?
Feeling great.
Yeah. I wish I could say the same.
Well,
I'm crusty today.
and it's your own fault.
It is a little bit. I wore myself out.
Yeah.
A couple nights in a row of, hanging out with my bros.
Getting shitty.
Yeah, I got a little drink on.
Nice.
That happens.
So did you do karaoke last night?
No carry choke me, as you would say. I love karaoke. I don't know what you have against it.
I thought I told you. I mean, I used to own a bar, and I had to sit through it on Wednesday nights. The worst ones were, of course, as I said to you before, the country karaoke.
Yeah.
Just kill me. Just shoot me down.
Stand by your man.
And then when I lived in Florida, it was the New York, New York. Every other person would go up and sing New York.
That's a
New
shame.
York.
Yeah, you got to pick good songs. That's the key to
do.
karaoke. Songs that fit your voice. Don't pick, Bohemian Rhapsody or something. Nobody can pull that off.
You can.
No, I can't. Nobody can
I
pull
heard
it
you
off.
tried that once.
Only Freddie can pull that off. So crazy couple of weeks. Just got back, not too, well, I guess it's been about a week or two now that I got back from San Francisco. So I spent a week out there.
Jet setter.
A jet setter, went to Dreamforce, the Salesforce, convention. I actually didn't go to any talks, but a lot of parties, a lot of little events in the evening. That's where most of the business happened. Not at the talks.
No.
So I'll never let you book a trip for me again.
Yeah, go ahead. Keep blaming me.
It was all your fault.
Yep.
And I hated you for a brief moment. So Kevin booked my trip to San Francisco. Let me tell you a little story. Gather round, children. Kevin booked my trip to San Francisco. And it's great because I hate booking stuff. I hate, sourcing flights and all that stuff. And it's hard to get a hotel in San Francisco during Dreamforce. It's, everything's booked up. It's hard to find a hotel, and it's all very expensive. The hotels are insane that week at least. $800, $900 a night, just insanity. So Kevin finds a good deal.
Through Expedia, by the way.
Through Expedia.
I booked the trip, I booked the flight and the hotel. And you have to admit, the pictures look nice.
They looked all right. So
Not all right, they look nice.
No, they didn't. But anyway, lesson learned. If a hotel in San Francisco during Dreamforce is $300 for the week, there's a problem.
I don't know
with
what
that.
the price was. It was all combined.
It was around that. Anyway, so I picture this. The
This is
plane
awesome.
lands. It's about 11 o'clock on a Monday night. I get into San Francisco. I get an Uber to my hotel. I think even the cab, his eyes widen, when I said the name, Sweden House Hotel. Take me to the Sweden House Hotel. Lightning flashed and thunder rolled. Anyway, he's like, oh, okay, I'll drop you off there. So I get out of the cab, and I'm in Crackton. There's there's people walking around, crackheads. It's very seedy area of town. It's dark. I've got my little bag of clothes and whatnot, and I'm just walking up and down this street going, where's the Sweden House Hotel? I don't see anything that resembles a hotel. I see a Chinese restaurant. I see what looks kind of like a prison with a big gate, and then I look through the gate, and it says in small words, Sweden House Hotel. So I can't get in because the gate's locked. This looks like Arkham Asylum. It's a terrifying looking place. And a guy eventually comes out, just somebody who's staying there leaves, and so I kind of get in. And I walk in, and it looks like The Shining. And I stare down the hallway, and there's two little twins looking at me.
Come and play with us.
And they say, come play with me, Kyle. Play with me forever.
It took me a while to set that up, by the way. I mean, I had to it did.
Yeah. You arranged the young
I arranged
twins?
the kids,
Okay.
and
So, and then a guy comes out of the room, and he looks kind of like Igor. He's still got a hunchback, and he's like,
you rang.
no, you come on in. And I was like, do you work here? And he's like, no. Like, what? Well, why are you registering me? He didn't work there, apparently. He got me signed in. He had a giant hand. That was upsetting. He had a giant
one hand, not both.
One hand was giant,
big,
like a foam.
but the other one wasn't.
It was like a foam mitt, but it was his actual giant swollen
Did you see
hand.
the other hand, though?
Yeah, it was a normal hand. So I'm just terrified at this point. And then he proceeds to tell me where the shared washroom is. Shared washroom, shared shower.
Well,
I didn't
a
realize.
lot of B&Bs have that.
Well, I've never experienced that before.
Really?
No.
Oh, yeah, I know. You're, from the upper
I'm
end.
very fancy.
Yeah.
Yeah.
You're from Cole Harbor.
Oh, yeah. So I get into my room, and it's like a closet, probably about as big as this table that we're sitting in. The floor stuck like it was in a movie theater, so my feet were sticking to the floor.
Nasty.
The bed was had rubber sheets on it. Apparently, everyone pisses the bed there. Probably more. And then I read a review online, and she said she found blood and stuff in her sheets when she got in.
It reminds me of that Captain Obvious advertisement when they find the finger on the floor.
Oh no, I didn't.
You ever seen that one?
No, I know you're a big fan.
I'm going to play that
Captain
for you
Obvious,
after this.
my pillow was like a sock with 3 cotton balls in it. That was basically my pillow, so I had to sleep on that night. And the light turned on with a string from the ceiling. I had to pull to turn the light on. So I thought I was going to be murdered. I seriously considered just calling an Uber and going back to the airport and going home.
Sleeping there.
It was traumatic. I was amazed I woke up alive. When I woke up, I was like, wow, I didn't think I was waking up again. I thought somebody was going to bust in my room with a chainsaw
Little Nova Scotia
and
boy
hack me
going
to
out.
bits. I was terrified. And I was cursing your name. I was sending you texts. Where did you put me? So I really did hate you at that time, but we're over it now. We're over it.
Nice.
Yeah.
That's good.
So there you go. Never let Kevin book your trip. And never go to the Sweden House Hotel.
We should definitely put a link on the podcast to that place.
I don't think they have a website.
You never know.
Yeah. All right. So with no further ado, let's chat with Rob Barbara from Build Ventures. All right. Well, we're here with Rob Barbara from Build Ventures here in Halifax, Nova Scotia. Thanks for being on the show today.
My pleasure.
Yeah.
Good beer.
So, it is good. We're drinking Tall Ship. I don't think I've had Tall Ship. No, I have it. I've had it in pubs, but I don't think we've ever bought in.
It's a Garrison
bottles
product. Great product.
Is it? Yeah. Okay. So this is kind of different. We don't normally have a venture capitalist sit on the show. It's a little change of pace. So we're not going to be talking about agencies and marketing and stuff, but I think there's a lot of cool stuff to chat about. So why don't you just give us a lowdown? What's Build all about? How long you've been around? What are you guys up to?
Sure. Build is 2.5 years old. It's a $65 million venture capital fund. And as you said, we're located in Halifax. We typically invest in companies in Atlantic Canada, but we can do things elsewhere. In the industry, we're considered generalists, meaning that we don't have a specific industry focus. We, personally are curious people, so we prefer not to be pigeonholed in one industry.
So you don't just invest in SaaS companies or mobile companies or whatever?
Absolutely. Yeah. We can look at anything, ICT companies, whether they be SaaS or otherwise, biotech, ocean tech, clean tech. Now, practically, though, we've only done ICT companies. We have 7 investments to date, but they range. We have, give you 2 bookends. On the one end, we're working with a company that is in the precision agriculture space. They're going to help farmers produce more crop and use a lot less chemicals while doing so. That's going to be a very important space, and I hope our company is one of the companies that can have a big impact. It's called Resson Aerospace. And at the other end, we're investing in a company called Interaxon, which has developed a meditation device, a brain-sensing wearable piece of technology that is currently being used to help people meditate, but it has applications that go straight into the medical space.
So you're sitting there meditating, trying to focus on your breath, and a thought of, I don't know, clowns or something comes in your head, and it will just erase that thought from your mind?
No.
Because that would be cool.
It would be cool if it could. It absolutely would be. Imagine that if you could actually change your thinking.
It's a dangerous,
Post-mortem.
dangerous story.
After the fact. No,
Yeah.
this...
Hopefully not after you're dead.
Sorry,
thoughts
not
are
post-mortem,
erased.
after the fact. This is why you shouldn't do interviews while you're drinking beer.
You've had like one sip, so you can't use that as an excuse.
I'm a venture capitalist. No, it monitors your brainwaves. So after meditating, it will tell you you were calm for this much of the time, you were in a neutral state for this much of the time, and you were agitated or in an active state for this much of the time. And through that, they think that it'll help people learn to meditate, and people will stick with meditation much longer.
That's pretty cool.
Yeah,
so there's a lot of
cool.
different things. Everybody thinks we're just like fishermen and farmers here, but there's a lot of really cool stuff happening.
Maritimers are extremely creative. They're very technically savvy, and they're entrepreneurial. So it's got all the ingredients you need to create a good startup community. And we're seeing great stuff, and a lot of stuff that's absolutely on par with anything else you see on the globe. So it's great.
Talk a bit about your involvement in Volta. You guys were instrumental in helping get that going too.
Well, okay, so just the listeners probably don't know what Volta is. So Volta is actually where the office we're sitting in right now is part of Volta. So it's like a startup house, startup community where different startups go and hang out. So how did you get started with
Well, my business partner, Patrick Keefe, was actually one of the founding members of the board. Not that he was the founder. Jevin McDonald, who's a local entrepreneur that did well, decided they wanted to give back to the community and create not just a sort of a non-physical community, a group of people, but actually a physical space that supports the community so that people with ideas would have a place to go, get up and running fast, inexpensively, but more importantly, work with people in the community. I mean, I think you guys can attest to it that it can be pretty lonely at times building a startup. And if you're stuck in your basement doing so, you just, that issue's just heightened. These people come together, they're working on different problems, but they're facing very similar issues. They get a lot of mentorship. And physically, we have a space, which we're in right now, that houses today a dozen startups, perhaps.
Yeah.
Can't remember, but many have graduated, and I think it will be, going forward, a very important tool for the whole ecosystem to build on.
So you talk to, I'm going to assume you talk to a lot of the agencies in town, different, advertising, marketing firms, which a lot of our listeners are in a company similar to that, doing service, doing client work, consulting. Have you found that a lot of agency owners have this idea of diversifying and building like a product or building a SaaS company inside their agency?
It's interesting. We actually have an investment in a company called Definio that sells to the agency customer amongst other customer bases, but the agency is a big part of their business. We can talk about that later. That's not your question. But it through that investment, it's amazing how much technology can help the agencies and how much the agency employees understand how much technology can help their business. And so it's natural that you see a lot of products come out of agencies. And I can count 3 off the top of my head. I mean, I'm sure there's many, many more, yours being one of them. But they also they face a similar problem. I mean, they see the idea, they want to build the product, they want to get the company going. But as you know, running an agency is very, very busy. So to find the ability to focus on the product, so I think there's more ideas and there's actually businesses that come out of it because you have to focus on that business 100%. You can't do it on the side in an agency. You can't get distracted by agency work. So I think if there was a way to solve that problem, we'd see a lot more come out of agencies as well.
I mean, I think the only way, I've thought about this a lot, and I think the only way to do it is if the agency can afford or somehow fund having an in-house team that doesn't touch client work. And if they can really have somebody just spearhead the project with the team that just has no idea what's going on in the agency, I think that's the only way to do it. I don't think you can pull a developer off a client project and have them work on it, Friday when they're drunk and most agencies, it's just never going to happen.
It's
right?
all like Mad Men, isn't it?
I think so. Yeah.
It was actually Patrick Keefe, your partner who I met before you guys were together as Build, who really liked our idea, came to our agency, and basically was the one who said we should do one or the other. That was his opinion, and he was bang on. We didn't listen right away, but we eventually learned.
You don't have to listen right away. So I think Kyle's suggestion is step 1. You have to find a way, at the very least, to fund and staff the project in a silo. that project cannot be affected at all by client work, because client work will always come first, right? And I think you said recently that the person you finally hired to work on it, you threatened to fire them if they ever did anything other than build Proposify or Pitch Perfect at the time.
Yeah.
But Kevin's point is very important. If at some point you're going to get outside funding, you're going to get a funding partner, it has to actually be a separate entity. The funding partner can't invest in the agency because the agency model is not something that most funding partners are interested in investing in. There's a fundamental problem with agency work. It's there's no leverage in it. And if there's no leverage in it, and that means like every time you do work, you got to staff up. There's commensurate cost.
Your assets walk out the door every day.
And your assets walk out the door every day. That's not a financeable model because it can't go vertical. The value you create can't go vertical. It can only go up as quickly as you staff up, you get customers, you staff up, and then you're always threatened that the people that are making the difference are going to walk out every day.
So if you had a founder of an agency who said, okay, I'm going to take that advice, and I've, say, got the capital to do it, to at least bootstrap the beginning part of it anyway, I'm going to set up a team, a small team, separate corporation, completely separate from the agency, would you still consider funding that startup, even though the founder is also running, like they haven't gotten out of the agency world, they just separated it? Would you still consider that?
Probably not. But the important point is the person who's going to make this thing happen, and maybe two people, has to be 100%, not just notionally, but financially incentive-wise on the project that we're financing.
As things get tough as they do in a startup, it's, you're naturally going to go, okay, well, we've got an agency over here that's, we've got some big client work where it pays pretty well. Let's just, take a little jump over here, right?
Yeah, and you just can't do that. I mean, your financing partners won't sign up for that. They just can't. So it's very important that if you're going to do it, you got to be really convinced that you're passionate about it, that you want to make it happen, that you're going to put in all the effort that you are going to be expected to do, and that you're all in. And then a venture capitalist will take a serious look at your business.
Yeah. So what do you look for? I know it's kind of a broad question that everybody would answer differently, but what do you look for in a portfolio company, somebody you want to fund and be with for possibly years?
Sure. And I'll use a case study. I'll use Affinio as the case study because it would be wrong of me not to talk about our one portfolio company that's selling two agencies. There's a disclosure. But Affinio, let me just tell you a bit about Affinio. Affinio has a very powerful engine that allows people to inquire or to do inquiries on massive databases. And their first commercial product is based on a number of databases: Twitter, Instagram, and I'm going to mess this up, so I'm not going to say the third, but suffice to say another major social network, where they can query the graph. And the graph is all the connections between all the people that are on the network. And by querying that graph, they can find similarities in persona. And they can describe customer groups by persona, not the traditional, gender, age, and the typical demographic data, much more about their interests and who they follow and who their influencers are and all that kind of stuff. And the agencies that are working with Affinio are finding this an extremely effective way to find audiences, tailor messages to audiences, and the difference in terms of effectiveness is dramatic. We invested in Affinio after they had the core technology built. They had early customers, but not many. But there was some validation that this was a problem that agencies wanted to solve. So we had some indication that there was a value proposition through the eyes of the customer. That's an first important distinction. You can describe value as a logic narrative, and logic is logic, and logic is something that you should be mindful of. But we need to hear it from the customer. What these guys are doing makes sense. We're willing to pay for it. I almost sort of jumped past, though, the most important criteria, and that's the team. A startup life is extremely difficult, as you guys know. The chance of a business plan that we're first presented with being the penultimate or ultimate business plan is pretty close to zero. So we need to know that we're backing people that are going to solve problems and figure stuff out as things change, as environments change, as markets change, as customer feedback comes in, and the angle isn't as valuable as they thought, and they've got to adapt accordingly. We need to know we're behind people that are going to both be open-minded and adaptable, but at the same time, able to make strong decisions and not just, react to every piece of information they get. They've got to be able to make those judgment calls and then effectively build their business as efficiently as possible while taking in this information. So the team is critical.
How do you know? I mean, it's a tough thing, right? Like, you've got to meet with them a few times.
Yep.
What traits, I guess, does like a good team show? When you don't know them that well, you haven't worked directly with them, so you're kind of just getting a pitch from an entrepreneur. You don't know them. How, I guess, do you evaluate the team and figure out, oh, these guys are good?
Yeah, and you're gonna never get it absolutely right? I mean, this is one of these areas where judgment is paramount. I start with character. I believe character is critical and can't be taught. So I'm looking for people that are going to be hardworking, trustworthy, honest, integrity, all that kind of stuff. A good partner, somebody who's going to be amenable to feedback, but is going to push back at the same time when they know better than we do. I don't want people that just react to things that we say. I want people that are comfortable debating and in conflict, but constructive conflict. It's all that kind of stuff. It's, strong values. They're doing it for the right reasons. They want to build a great business, and they hope to get stinking rich at the same time. But it's very important that it's build a great business first. If I do that, I'll get stinking rich along the way. I mean, that's an important sort of perspective. So character is extremely important. They have to be a domain expert. There are people out there that believe they can find a problem, create a solution in almost any industry. I'm less confident that that's the case. I think if you're behind on an information basis, if you don't have, not even if you don't have an information advantage, if you're behind, I don't think you're going to have.
Yeah, if you're building a product for farmers, then you better have been a farmer at one point in your life, or somehow involved in the farming industry.
Somehow involved in the farming industry.
Yeah.
I think that's important. And then is the team going to be the kind of team that's going to build a company in a way that's going to attract and retain great people? And do they understand how important that is? Because nobody's going to be able to do it alone. They're going to have to hire people, and that hiring the right people, motivating them in the right way, is going to be one of the make or break things for the company going forward.
Interesting to bring that up. So I'd like to get your take on this. I don't know if you've seen, I think it was just published yesterday. So Mark McLeod, startup CFO, dude from Montreal or Toronto anyway, he published a post yesterday that said essentially bootstrap companies are gone or dead, in the sense that, it's kind of that provocative headline to get people to read it. But when you actually read the article, what he's saying is that companies that have been around for a while and bootstrapped and made big companies like FreshBooks, Shopify, there's a few other examples in there, they may have been bootstrapped and have, they do tens of millions of dollars or more in revenue, and they've got hundreds of employees. It's all bootstrapped. They all eventually still end up raising venture capital. Yep. Campaign Monitor's another example. Yep. 10 years, bootstrapped company, hundreds of thousands of customers all over the world. They just raised venture capital.
Even Basecamp raised money late on.
Yeah, they did. They did a small amount. I mean, what's your view on that? Could a bootstrap company ever... I mean, I don't know what the end goal is. I know for you as a VC, right, you've explained this to us, and maybe you want to explain it to the listeners, that for the economics to make sense in venture capital, you need to believe that it's going to be a large company, right? I don't even know what I'm asking. I'm just
so you asked three. So Kyle, you asked three. Okay. You asked three great questions there. I'm going to answer all three. Let's talk about financing strategy first before we talk about venture capital. So I believe in the early days, you should absolutely bootstrap. You should show yourselves and any future partners that you can get places on little resources. It shows a core efficiency in your operations that is extremely valuable going forward with or without money. So in your case, absolutely, we have taken note that you guys have gotten really far on a very small sum of money, and that's notable. And there's a good and a bad about that, but it's mostly good. It mostly means that you guys are sound operators, you're very efficient, and you're probably going to be responsible with any money that you take from outside partners. But your next question is, if you don't take venture capital, are you dead or some version of dead.
Yeah, you can't win. You can't win the market, right?
So I don't make absolute statements, but generally we're all in a winner takes all business market here. Winners take all. If you look at the major players in technology, you can name them all. They have massive market shares, and they've pretty much pounded the competition. And you can't do that without I don't think you can do that with outside financing. So what happens a lot in the interim is you get companies selling, and there's nothing wrong with selling. There's absolutely nothing wrong with selling. You don't have to be the survivor. You don't have to displace the incumbent. You have to do what makes right. All you should do is what makes sense for you. As long as the core of it is building a great business, then you'll have options. And if it's selling early and that suits the entrepreneurs, that's the right thing. Typically, if you get venture capitalists involved, that option is somewhat taken off the table because of what I'm going to answer your third question in a second, and then that statement will make sense. So you don't have to win. There's different versions of winning. You have to do what makes sense to you, what you want to do. But if you plan on sticking around, being a going concern, going public, displacing the incumbent perhaps, you can't do it without financing. I'd be shocked if you could do it without financing. And then your third question, venture capitalists. They're not for everybody, and this is why. The venture capital model requires that the company that a venture capitalist is investing in, they believe that if it's successful, and that's the first probability of success generally is pretty low in venture capital, and that's why the second requirement is that if it is successful, it's huge. And there's different versions of huge depending on the size of the fund. For Patrick and I, huge is $100 million plus generally. That's a bit of a rule of thumb, but that typically is what we need given how much of the company we end up owning and how much of a return we need on our winners to make up for all of our losers. But all companies we invest in need to be big. For us, maybe 100 million. But said another one, we have to think we have a very good chance, if it is successful, that it makes 10 times our money. And that's why if you bring a venture capitalist in, things change. Yeah. They absolutely change. And so that's not for everybody. And one thing that gets taken off the table generally is this concept that you build a nice business. And there's nothing wrong with a nice business. In our business, you say nice business and it conjures up a bunch of negative connotations. But they're fine.
Call it lifestyle business.
I hate the word lifestyle because
I figured you would.
There's a negative connotation to it. And there's nothing negative about having a cash flow generative, profitable businesses that pays nice salaries and builds equities, and you guys are having a blast doing it, and the employees are having a blast. There's nothing wrong with that. There's also nothing wrong with building a business and flipping it quickly in a few years for, what in the venture capital world is considered very little money, but from a personal perspective is a lot of money.
Yeah,
there's
10,
nothing
20,
wrong with
$30
anything
million
like that.
kind of thing.
The point, though, that I think is the answer to your question is that stuff gets taken off the table once a venture capitalist gets involved. So beware. If you're out there thinking about starting a business and thinking about raising venture capital, think long and hard before you go and raise venture capital.
Do you think that people I don't know. It sounds like VC route is kind of further down anyway. Like if you've just got a product, you've got some early traction, it's sort of an MVP or somewhere in that transition. Should people just kind of disregard VC money altogether and just go with angels, whatever money you can raise up, friends, family, before going to a VC?
That's again, it's a very hard question. And by the way, VC, there's different stages. So we just happen to be what people call sort of a late seed or a Series A investor. So we wait for that early traction. But there's venture capitalists out there that provide less investment capital at much earlier stages. So it's available. They're seed investment venture capitalists. So they'll write a $250,000 check for example, but at a much earlier stage. Where we don't write checks for less than $1 million.
And I would, think that there's VCs out there that are doing like late stage stuff that they probably don't write anything. Yeah. I mean, how
$10 million.
$10 million?
Yeah. Big.
Okay.
Now, your alternative at the early stages, angels and friends and family. I did a startup 15 years ago. It's the best experience of my life. I learned more in that 16 months than I learned any other 16-month period. It failed, not miserably, but it failed. We took friends and family money, and I'd never do it again. Put too much pressure on me. But that's my personality.
Yeah.
Right? It was people wanted to give us money, wanted to support us. As much as we tried to explain to them what they were getting involved in, I don't know if they truly understood it. They just sort of backed my partner and I, and it just put too much pressure on me. So you got to think about that as well. Yeah. That depends on your personality.
Well, personally, I didn't come from wealth, so if I ask family for money, they might give me $10.
Right.
Like,
so it's not an option for you.
Yeah, if you've got wealthy family and it's the money that they can afford to lose, and they kind of go in knowing they're essentially throwing it away and they don't ever expect to get it back. But hey, if it turns out good, then great.
Yep.
But yeah, you don't want like taking your grandma's life savings. And,
no.
Yeah. So what? Okay, so you said your biggest kind of when you look at a business, you have to believe it's going to be $100 million or more in terms of what you get from an exit. I mean, I know, like I'm thinking Sequoia, some of those other Silicon Valley-based VC firms. It's quite a bit bigger, isn't it? Right? Because you hear about these late-stage venture deals that are like they raised $100 million or more, and it's like, what does the return have to be on the other end?
Well, it also speaks to the size of the fund. So we're lucky that we're only a $65 million fund, so we have more flexibility around both the size of the deal and the stage at which it exits. It's easier for us. I mean, we can go in a bit earlier, and it doesn't kill us if the company exits a bit earlier at a lower valuation. When you're running $1 billion fund like Sequoia, I don't know how big it is, but it's big. It's the same thing. I mean, Patrick and I are going to manage 15 investments in this fund at the size that we are. If Sequoia did the same size of investments we did, they'd be, they'd be managing 250 investments. It's just not practical. So they have to go in. They have to write bigger amounts per company, which means they have to be at a later stage, higher valuations, and all that kind of stuff. So that's what you're seeing. Now, it's not all bad for these guys, believe me. Sequoia benefits greatly from that because of their brand name. They get first look at everything. They get into all the great things, and it sort of perpetuates on itself. So they just keep getting bigger, but they keep doing well, and they keep making a lot of money in it. They get into the later stuff, and they write, it may seem crazy that they're investing $40 million into a company at a $200 million valuation, but that company has a very good chance of going public and being worth $2, $3, $5 billion.
And is that just because they've got the decision makers have a really good eye for it or a good gut sense, or is it just because they get the best cream of the crop first?
Listen, both, but the one thing that's unique to them is that they get the cream of the crop.
I think like a big misconception that people have maybe about venture capitalists, and you could probably speak to it more than I can, is that everybody assumes that VCs are these, big pompous, like ultra rich
Wall Street kind of guys.
Who are gonna like tell you to fuck off if you come up to them, And from the more I read and hear about it, it's like you got the top VCs in the world, but then there's a huge mid range of VCs that to varying successes, right?
A lot of them were entrepreneurs, which I think is the big distinction. They did it. They were operators. Right. They felt the pain. They understand what you guys are going through. They're much more humble than people who have just seen it from the sidelines and just assume it's all about money and it's all about bravado. It's about neither. It's about hard work. It's about good ideas, good execution, hard work. And believe me, never think your shit doesn't stink. Right. So, and I think the VCs that are typically involved understand all of that, including the last one. So they typically aren't that way. And which is, I've been very surprised at how normal the venture capitalists that I get to work with are. It's good.
Well, you and Patrick are very laid back, nice guys. You don't come across that way. I've met some that kind of carry the air, but I guess the thing that I always think sometimes is that like you guys have. It's not all wine and roses for you guys. Like you've got people to please. You've got your LPs who fund you.
Yeah.
You've got defined companies. It's not like you're just sitting back, king on the throne, being like, yay or nay kind of thing.
So I'll tell you a story. This is a real story. We decided we were going to invest in a company, and as for those that don't know, there's a process. We do a lot of work initially to decide whether this is something we're interested in. If we are interested in, we probably sit down and discuss terms, and we give the entrepreneur something called a term sheet, which describes in a very shortened version the core of the transaction and how it's going to, and the terms that are going to dictate the transaction. Then we go into a phase where there's further sort of detailed due diligence, sort of the crossing the T's and dotting the I's of making sure that we haven't missed anything that could bite us in the ass if we didn't do it. And then we pass everything over to the lawyers, and everything gets written. Our 2-page term sheet turns into a encyclopedia of agreements, and none of it is readable, and that process really, really, really sucks. Like, it's a terrible process. We had a deal where the first part of that process went well, and it went efficiently, and then we gave everything over to the lawyers, and then it was a complete and utter fiasco. What should take 4 weeks took pretty close to 12.
Wow.
And the problem was, at the end of the 12, was the company had continued to operate in those 12 weeks. And there's sort of a weird sort of silent period where you're finalizing a deal, so you're not a shareholder yet, so you can't be in there. You can't be in there sort of working with management and getting updates. But at the same time, you've made the decision to be a shareholder. So it's this really uncomfortable period where you're not getting any information, but you've sort of committed.
Yeah.
Well, at the end of those 12 weeks, we sort of finally got some communication, and things weren't so good.
Oh, wow.
Right? Wow. It was like, holy cow, like, this sucks. Like, this company, it's not a disaster, but it's materially different than the decision that we had made, especially on the amount of money that they'd spent. They'd spent a ton of money, and what that does is it significantly shortened their run rate, which is a big problem, because if you found great people that are going to solve problems and figure it out, the one thing that they do need is fuel in terms of time to figure it out. And if they don't have as much money as you thought they did, they have less time. So that's just a story to tell you, it's not all shits and giggles from our perspective. Like, it's constant. There's always issues. We're always trying to help. Management runs these companies, but at some point you also have to replace management if things aren't going well. And of our 7 companies, though, we've only replaced management once. We don't make a decision to invest in a company if we think that we have to replace management. Some venture capitalists will decide that they love the business, but they have to get rid of the management, and we'll make that as part of the deal. Patrick and I won't do that. We think that's a disingenuous way to approach it. But unfortunately, in one situation, after many, many, many months, it was clear that the CEO wasn't up to the job, and we had to replace him. So there's always stuff going on. But you know what? It's what also makes the job fun.
Yeah.
The reality is, if it was just cruising all the time, it'd be boring.
Yeah, and I would imagine, too, that the longer a company's been around, the more complex a deal would be. It would have to be. Like, if it's a brand new company, brand new corp product out there, there's no baggage, there's nothing.
Few shareholders.
Now I was going to ask, when you co-invest with another VC, does that add a lot of complexity and longer the process? I would think it would.
It certainly doesn't shorten it.
Right.
But it depends on who.
Do you do a lot of those deals with other?
Yeah. We've done it alone. We're happy to do it alone. We're happy to. Sometimes we need to do it with somebody else if we think the company's going to need a lot of money in the future. We're also happy to work with most venture capital firms, maybe not all. But it adds complexity. Definitely adds complexity. But in some ways, diversity of opinion is a valuable and an effective thing if you have it and it's productive. And so that also provides diversity. It's been good in a few cases that we've had another venture capitalist involved.
So this kind of actually brings it back around to kind of more your service agencies and your consulting firms, is this whole idea of a board. I don't think probably most small private, digital marketing agencies, PR agencies, whatever, actually have a board. They've got the owner and maybe partners, but they don't actually have a board. So, I've got my opinion on it, but do you think that it's important for all companies to have a board of directors? Do you think there's value in that, even if it's not a tech startup or a really big, growing, huge company?
Assuming a good board, absolutely. Because they again, diversity of opinion, contacts, sounding board, experience. There's a whole bunch of valuable things that can come from the people on your board that you may not have, especially if you're a young entrepreneur, that you probably don't have. Yeah. If you get a bad board, they don't work well together. There's two extremes, too much conflict or too much consensus. Both aren't good. Divergent objectives. And I mean core objectives. Obviously, there's never going to be total congruency, but if you have effectively very different objectives at the outset, that's going to be a problem. It could be a huge distraction. Short-term thinking is something that could come with the board. You need to think long-term. You got to be able to look through the day-to-day and the week-to-week and the month-to-month to stay on track with where the value is created, and that's typically is long-term. You bring more people in that aren't there day-to-day, they may start thinking more short-term. There's a whole bunch of things that could be bad about a board, but in general, if you build a good board, a board is valuable.
Yeah. I know for myself, okay. I was just going to say that as an entrepreneur, one thing I like about having a board, which we do now, is just that idea of accountability. Because whereas like we were running the agency, I didn't feel like a need to kind of every month, and I don't even really need to do this with a board, but every month, if you really like, it's the last day of the month, and you've looked at your metrics or your financials or whatever makes sense for your business, there's a really productive thing in basically thinking, I've got people to please other than just myself and my business partner. What have we done in the last month or the last 3 months, and what do we want to do to move it ahead? So I think just knowing that there's people there who kind of expect something is actually a really positive thing as an entrepreneur.
Yeah, that's a good point. And again, if it's done productively, I'll tell you another story about another company we've been involved in. They got so hung up on their quarterly projections that they told us that, say, we have a board meeting by, typical process, the management will tell us what they think the near term looks like. The problem with that is that they get beholden to those numbers, and they feel if they miss those numbers, it's some sort of a failure. They're worried predominantly about meeting short-term objectives. We want them to meet long-term objectives. So that's the only issue around this account. It's got to be done properly. It's got to be like, it's not just about hitting quarterly numbers. It's about hitting value creation milestones, which could be, one of them could be described in the numbers, but it doesn't have to be about just hitting the numbers. So it does create accountability, but you got to watch that it doesn't create the wrong kind of accountability.
Yeah, good point. Thanks a lot for being on the show, Rob.
My pleasure.
Loved
That was
having
fun.
you.
That was great.
Yeah.
We'll do a version 2 pretty soon.
Anytime, as long as you have beer.
Oh, no worries there.
Okay.
Have a good one.
Thanks,
Take
guys.
care.
Bye.
Bye.
So that was a good chat last week. Well, I guess we just listened to wink wink that we had with Rob from Build here locally.
It was nice to. It was something different.
It's something different.
Yeah.
Yeah. So hope you guys enjoyed that. Actually, we do have a question that somebody asked, but I'm going to save it for the next episode.
Okay.
So we have an intro.
Sounds great. Okay.
Cool. Enjoy. Hope you enjoyed the episode. As always, rate and review us on the iTunes Store, and we'll see you next time.
Later.